Okay, so we're diving deep today into, a really specific area, but one I think is going to be really interesting.
Yeah, it's a fascinating corner of the market we're looking at
We're
today.
talking mining stocks.
Specifically, a handful of mining companies that are showing some real potential as we head into Q2 of 2025.
Exactly. And I know you guys listening out there are probably thinking, oh man, mining stocks, it's such a huge field.
Yeah, there's so much data out there, so much information.
How do you even begin to figure out where the real opportunities are
Right.
without getting completely overwhelmed?
We've got you covered.
We've been looking at some analysis from the Mineral Move show,
And they've done a lot of the heavy lifting for us already by highlighting their top 5 mining stock picks for this upcoming quarter.
which is Q2 2025.
Yeah, so their analysis is rooted in what's been happening in the market lately, combined with, their own projections of the trends that are likely to shape Q2.
And what's really great for us is that these potential investments span North America and the UK.
So we're getting a nice diverse, geographical perspective.
Exactly. So our mission today is pretty straightforward
Yeah, it's all about extracting those key details.
about these 5 companies and the kind of market dynamics that are influencing them.
By the end of our conversation, you should have a pretty good grasp on these potential Q2 movers.
So let's kick things off with number 5 on their list, which is Anglo American.
Ticker symbol AAL on the London Stock Exchange.
Anglo American.
Yeah, a UK-based company, a giant, really, in the mining world.
Definitely had a bit of a rough time in 2024.
Oh, yeah. They definitely had some challenges.
Navigated some choppy waters there.
But that's what makes this so interesting, right? How they've responded to them.
Yeah, what have they been doing?
Well, they've actually spent all of Q1 2025 restructuring.
Okay.
And it really seems like this is, all part of a deliberate strategy to come back even stronger in Q2.
Like a reset almost.
Exactly.
And it's important to remember they've got a really diverse portfolio.
Oh, yeah. Anglo American's not just focused on one specific resource. They've got a really broad range.
Which can be a big plus in mining, right?
Yeah.
Because the sector is often so tied to the prices of individual commodities.
For sure.
But what Mineral Moves really honed in on for Q2 is the anticipated increase in demand for copper and platinum.
And I think it's crucial to connect that to the bigger picture, right? The whole global push towards electric vehicles and everything happening with hydrogen fuel cell technology.
EVs and fuel cells.
Huge drivers for both of those metals.
Yeah. Copper, of course, is just essential for all the infrastructure around EVs.
And platinum group metals, they're just crucial components in so many fuel cell technology.
And speaking of copper, Mineral Moves specifically highlighted Anglo American's Quellaveco copper project in Peru as a potential Q2 catalyst.
Yeah, that project's definitely one to watch.
It sounds like if we see any positive news from there, like maybe increased production targets being hit or, just positive feasibility reports, things like that.
It could definitely give the stock a boost.
Yeah, absolutely.
And, it's also worth thinking about those broader market dynamics we were talking about. Right?
Okay, yeah, how so?
If we start seeing a tightening of the global copper supply.
Like maybe production issues in other parts of the world.
Exactly. Combined with, maybe some significant economic stimulus coming out of China, which is a huge consumer of copper.
They consume so much copper.
All of that could create a really favorable price environment for companies like Anglo American.
It's all interconnected, isn't it?
Oh, it absolutely is. These global levers really impact how commodities are valued.
So basically what Mineral Moves is suggesting is that Anglo American, despite some of their recent struggles, could actually be a bit of a value buy as we go into Q2.
It's the essence of their argument.
Yeah.
They're framing it as value buy with upside.
Value buy with upside.
Because the idea is that their proactive restructuring that we talked about, plus these anticipated market tailwinds, could really fuel a significant recovery in their stock price.
Okay, so they're betting on that rebound.
Exactly.
Makes sense.
Let's move on to number 4, shall we?
Yeah, let's do it.
Wheaton Precious Metals trading under WPM on the Toronto Stock Exchange.
A Canadian company.
And they're doing things a little differently than your typical mining operation.
Yeah, they've got a really unique model.
What's fascinating about Wheaton is that they function as what's called a royalty giant.
Royalty giant.
Which means that unlike, Anglo American or a more traditional miner,
Yeah.
they don't actually own and operate mines themselves.
Okay, so what do?
Their whole business revolves around these things called streaming agreements.
Streaming agreements.
Yeah, have you ever heard of those?
I've heard the term, but I don't fully understand it.
Okay, so basically think of it like this. Wheaton will provide upfront financing to mining companies that are developing new projects.
Okay, so they're kind of like the bank almost.
In a sense, yeah, they're providing the capital,
Okay.
but in return for that upfront investment, Wheaton gets the right to purchase a certain percentage of the mine's future production.
Okay, so they're basically pre-buying the metals
That's a good way to think about it. And they're usually buying precious metals like gold and silver.
at a discounted rate.
Yeah, typically at a fixed price that's way below the current market.
That's really interesting. Okay, so how does this model play into the whole Q2 picture?
Well, Mineral Moves is suggesting that with gold and silver prices expected to rise in Q2, Wheaton's going to be in a really good spot.
Because they locked in those lower prices.
Exactly. Any increase in the market price for those metals just directly boosts their profit margins.
Makes their margins bigger.
Right, because their purchase price is fixed thanks to those streaming agreements.
That's a really smart model, especially if you're anticipating those prices to go up.
And it's also a great way to add a bit of stability to your portfolio, particularly if you're worried about market volatility.
Right, so it's kind of like a hedge almost.
In a way, yeah, because their portfolio actually includes streaming agreements with over 20 currently operating mines.
So they're not reliant on just one project.
Exactly. It's diversified across all these different projects and different operators, which really reduces their exposure to any one specific mine having, operational issues.
That's really smart. That makes a lot of sense.
It's a lower risk way to get into precious metals, basically.
And Mineral Moves actually describes them as a hedge stock with growth bones.
Which is a pretty good way to put it, right? They offer that stability and downside protection, but also the potential for significant gains if precious metal prices really tick.
So they're kind of the best of both worlds in a way.
Yeah, you could say that.
Okay, so let's shift gears a little bit and talk about number 3 on their list, which is Freeport-McMoRan.
Ticker symbol FCX on the New York Stock Exchange.
Now, this is a U.S.-based company, and when you talk about copper, they're a big player.
Oh, yeah, they're a major name in the copper market.
If you're looking for exposure to copper, Freeport-McMoRan is the one to look at.
Absolutely. And what really sets them apart is the massive scale of their copper reserves globally.
Huge reserves.
The source specifically pointed out their Grasberg mine in Indonesia, which is gigantic.
That's the one I've heard of.
Plus, they've been ramping up production here in the U.S. too, especially in Arizona.
So they're covering a lot of ground.
They have a substantial global footprint. Yeah. And this really positions them well to capitalize on what's happening in the market.
What is happening in the market? What should we be paying attention to?
Well, Mineral Moves mentioned that the price of copper has been kind of flirting with that $4.50 per pound mark lately.
It's getting close.
And there's a lot of chatter among analysts that it could break through $5 in Q2.
And if that happens, that would be huge for a company like Freeport, right?
No, absolutely. A sustained move above $5 per pound for copper would be massive for their revenues and profits, just given the sheer volume of copper they're producing.
Yeah, it would be a game changer.
Now, Mineral Moves also mentioned something else interesting about Freeport.
What's that?
Their molybdenum production.
Molybdenum. That's not a metal we hear about every day.
No, but it's actually super important for industries like aerospace and energy.
Okay, so how is it used?
It's used to strengthen steel alloys, which makes it vital for things like aircraft components and certain types of energy infrastructure.
So if those sectors see a surge in demand in Q2, that could give Freeport an extra boost.
Exactly. It's an additional revenue stream on top of their already massive copper operation.
So it's kind of like a diversification play within the metals market.
Exactly.
Okay, moving on to number 2, which Mineral Moves describes as exciting,
Sigma Lithium.
trading on both the TSX Venture Exchange and NASDAQ under SGML.
This is a Canadian-listed company that's really focused on a hot commodity right now.
Lithium.
Lithium's incredibly hot.
Yeah, everybody's talking about lithium.
And Sigma Lithium's been generating a lot of buzz lately, primarily because of their Grota de Cirilo project in Brazil.
And they've made a really fast transition from being a junior explorer to almost a producer, haven't they?
Yeah, they've moved incredibly quickly from exploration to development to now almost being in production, which is pretty rare in this industry.
Yeah, usually those timelines are way longer.
Exactly. It speaks to how efficient they've been at getting this project off the ground.
Okay, so how does that position them going into Q2?
Well, obviously, the continued growth of the EV market is a huge tailwind for lithium demand.
Because it's used in EV batteries?
Exactly. And lithium prices have been a bit volatile lately. But if we see a rebound, Sigma, Lithium is in a prime position to capitalize on that.
Especially since they're about to start producing.
That's right. Their timing couldn't be better.
They could see some really big gains.
And another thing that makes Sigma Lithium interesting is their strong commitment to ESG factors.
Environmental social governance.
Exactly. Mineral Moves highlighted their efforts to achieve carbon-neutral lithium production.
Which is a big deal for a lot of investors.
It really is a major differentiator these days. More and more investors are looking for companies that align with their values.
And that are focused on sustainability.
Absolutely. And on top of all of that, there's also the potential for, some really big stock movement if we start seeing major players in the EV space getting interested in Sigma Lithium.
What do you mean by getting interested?
Well, imagine if a company like Tesla or BYD decided they wanted to secure a long-term lithium supply agreement with Sigma Lithium.
Or maybe even make a strategic investment or, try to acquire them.
Exactly. Any of those scenarios could send their stock price soaring.
Wow. So there's a lot of potential upside there.
Yeah, definitely one to watch.
Okay, so finally we've arrived at Mineral Move's #1 pick.
Rio Tinto.
Dual listed on the NYSE and the London Stock Exchange under the ticker RIO.
This one's a real heavyweight in the mining world.
Yeah. Mineral Moves actually uses the word behemoth to describe them.
But what's interesting is that they're not just sitting back and resting on their laurels.
No, they're actively making strategic moves as we head into Q2.
And those moves are clearly aligned with some major global trends.
What kind of trends are we talking about?
Well, firstly, they've got huge investments across multiple crucial commodities.
They're involved in a lot of different areas.
Yeah, which provides a lot of stability.
What are some of the key areas?
Well, they've got substantial iron ore operations, which is still fundamental for global infrastructure development.
Iron ore is always in demand.
And of course, they're also big in copper and lithium, both essential for electrification and all the green technologies that are emerging.
So they're covering a lot of bases there.
They really are. And Mineral Moves specifically pointed out their recent deal in Serbia.
Oh, yeah, I read about that.
Which is all about lithium extraction.
Potentially a big deal for Rio Tinto.
It could be transformative because the idea is to establish a large-scale lithium production operation outside of China.
Which currently dominates the lithium market.
Exactly. So if Rio Tinto can pull this off, it could make them a truly global player in this crucial battery metal.
And they're expecting some key regulatory approvals in Serbia in Q2, right?
Yeah, if those come through, it could have a huge positive impact on their stock.
So aside from that lithium deal, what else makes Rio Tinto attractive right now?
Well, Mineral Moves emphasize their solid dividend payouts.
They're known for that.
Strong cash flow generation.
Always a good sign.
And, of course, their vast global diversification across various commodities and geographies.
So they're not too reliant on any one thing.
Exactly. Those are all the things that make large, well-established companies like Rio Tinto appealing to investors, especially in times of, potential economic uncertainty.
It's like the old saying, don't put all your eggs in one basket.
Exactly. Mineral Moves actually describe Rio Tinto as the big ship you want in rough waters.
That's a great analogy.
It really captures the sense of stability and reliability.
Okay, so we've talked about these 5 individual stock picks that Mineral Moves is highlighting for Q2.
But they also talked about some broader market trends that are worth paying attention to.
Yeah, those are important because those trends can impact all of these companies.
Absolutely. So the first trend they're watching is continued volatility in the prices of both copper and lithium.
Okay, so we should expect some ups and downs.
Yeah, and that volatility is going to be closely tied to what's happening in China.
Because they're such a big consumer.
Exactly.
Yeah.
Any economic data or policy announcements coming out of China could trigger some pretty big swings in those prices.
And it's not just China. We also have to keep an eye on the global EV market, right?
Of course, because any shifts in demand projections for EVs will directly impact demand for those metals.
So lots of moving pieces there.
Yeah. The second big trend they're watching is gold.
Gold, the classic safe haven.
Exactly. Gold is expected to maintain its role as a safe haven asset, especially given all the geopolitical uncertainty we're seeing around the world.
So if things start to feel shaky, people tend to flock to gold.
Which can drive up its price.
Yeah, we've definitely seen that pattern before.
And the third key trend they highlighted is the increasing importance of ESG factors and what they call green mining.
Green mining.
Yeah, essentially it means that investors are no longer just looking at the financial performance of mining companies.
They're also looking at their environmental and social impact.
Exactly. And the quality of their corporate governance, how they operate ethically and sustainably, is becoming more important.
So it's not just about profits anymore.
No, it's about the whole package.
Companies that could prove they're operating responsibly are going to be rewarded by investors.
Absolutely. They may even be able to command a premium valuation.
Okay, so those are the three big trends they're watching.
But they also brought up a really interesting additional point.
What's that?
It's about a kind of non-traditional driver of demand for the mining sector.
Okay, something outside the usual industrial and consumer needs.
Exactly, and it's all about AI.
Artificial intelligence.
Yeah, all those advancements in AI technology are actually creating a huge demand for certain metals.
How so?
Well, AI applications require massive amounts of processing power, which means we need to build out all these data centers and the infrastructure to support them.
Like server farms and things like that.
Exactly, and that translates into a growing demand for rare earth elements, which are used in advanced electronics. Plus, huge amounts of copper for wiring and connectivity within those facilities.
So the tech sector is actually becoming a major driver for the mining industry.
It's a really interesting trend.
It is. Okay, so to wrap things up, this deep dive has given you a rundown of 5 mining stocks that Mineral Moves thinks could be on the move in Q2 2025.
But remember, as Mineral Moves themselves emphasize, all of this is for informational purposes only.
It's not financial advice.
Exactly. Before making any investment decisions, you need to do your own research.
And talk to a financial advisor.
Absolutely.
And if you want to dig deeper into any of these companies, there are some specific things you can look into.
Yeah, like for Anglo American, for example, you might want to really dive into the specifics of their Q1 restructuring efforts.
And for Wheaton Precious Metals, it would be worth looking into the details of their long-term streaming contracts.
And for Freeport-McMoRan, you could examine the scale of their copper and molybdenum reserves.
And Sigma Lithium, you could look into their carbon-neutral lithium production initiatives.
And for Rio Tinto, keep an eye on that lithium deal in Serbia and those regulatory approvals we were talking about.
All good things to keep in mind.
It really is, and it leads to a final question that I think is worth pondering.
Okay, what is it?
How might unexpected global events, things that we can't even foresee right now, how might those events impact the trends and opportunities we've discussed today?
That's a good question because things can change so quickly.
They really can. So while analysis and expert opinions are valuable, it's important to remember that the world is constantly in flux.
Yeah, the future is never certain.
That's right.